If you think that your input tax credit is safe because you have not availed it in your GST returns or you have already availed it in your GST returns, then you are in for a surprise because Rule 86A of the CGST rules allows the GST authorities to block your input tax credit whether you have availed it in the returns or you have not availed it. Blocking of ITC can lead you to a situation wherein you will end up paying GST liability in cash, which eventually impacts your working capital and also delay in filing GST returns.
Hi, I am Pradeep Reddy, a chartered accountant with over 10 years of experience in customs duty, GST, foreign trade policy and VAT. Over the years, I had the opportunity to work with businesses of various sizes, handling their tax disputes, helping them claim their refunds faster, and also handle their whole gamut of tax complaints.
Watch till the end. I'll take you through Rule 86A and what courts are saying in this regard and how you can fight back smartly in case your credit gets blocked by the GST authority. This is what Rule 86A and the corresponding CBIC circulars say about the blocking of input tax credit. First, the GST authority must have a reason to believe that the input tax credit has been availed incorrectly. Such reasons can be any of these four. One, it can be a fake invoice, or it can be supplies from a fake supplier, or the tax which is mentioned in the invoice has not been paid. And finally, the credit has been claimed even though the goods have not been received. So therefore, credit can be blocked only if any of these four reasons are fulfilled. Once the GST authorities are satisfied that one of these conditions is fulfilled, then they should issue a notice in writing mentioning the reasons for blocking the credit, and thereafter they should a hearing to the taxpayer so that they can present their version of the facts. Thereafter, the GST authorities can pass an order accepting or rejecting the contentions made by the taxpayer. And during this investigation process is going on, the credit can be blocked up to a period of maximum of 1 year. What the courts are saying in this regard? The courts have time and again categorically held that input tax credit cannot be blocked under Rule 86A unless a notice is issued to the taxpayer and a hearing has been provided to the taxpayer to present his version of facts. As regards the blocking of the future credit, that is the credit which shall be availed in the future, some courts have held that future credit cannot be blocked. The credit which can be blocked is the credit which is lying in the electronic credit ledger as on that date. While some other courts have held that future credit also can be blocked. Therefore, we'll have to look at this scenario depending upon the state where you are located. As regards filing of a writ petition or an appeal in terms of section 107, the courts have held that if the order through which the credit has been blocked is detailed enough and reasoned order, then an appeal can be filed under section 107. And if the order has been issued without any hearing or the order has no mention of the reasons why the credit has been blocked, then the taxpayers can approach the jurisdictional high court through a writ petition. Next time when you face such a situation of credit blockage, ensure that you follow these rules and judicial precedents to protect yourself. If you find this video helpful, follow me for more such videos. See you in my next video.